positive are you relative to the last 5 years or so? Because you've, for the most part, maintained more buys than sells over that period of time. Is this as constructive as you've been, or somewhere in the middle?
Well, we certainly upgraded several of the largest banks in the middle of the pandemic. And a year ago when I was on your show, it was about defense. It was about the resiliency of the banks. And a year later now, you see that credit quality at banks has been far better than anybody expected. Credit losses are at a half-century low. But now for the banks, it's really about offense. And Wilfred, I'll give you two for Tuesday. One, we still expect an upward re-rating of bank stocks to the stock market as a whole. Third quarter was a turning point. It was the first time traditional banking revenues increased for a few years. More loans, higher rates, and we expect this turn not just for the next 1 or 2 quarters, but for the next 1 or 2 years. And the second item here is we expect an upward re-rating of the biggest banks versus the banking industry. For 50 years, money center banks traded at a discount to the bank group, and we say no more, at least in the case of Bank America and JP Morgan. We increased our targets to high on the street yesterday. For both Bank America and JP Morgan, they benefit from the tech revolution at banks, and you've seen that with the market share gains over the last year and a half, equal to the 6th largest bank when it comes to deposits. And here's the point that's really underappreciated. The big banks, as well as the industry, retooled for the last decade with technology. And when the revenues come back, you really start to see those benefits through an incremental margin, a profit margin on new revenues that are far better than they were in the past and far better than expected. And that's why our estimates are still, well above the street. So last year it was about defense for the banks. Right now it's about offense for the banks.
I get that opportunity in terms of improving the operational leverage from tech, but is the threat from fintech also bigger than ever?
Well, I have 3 words for you, and those 3 words are primary checking account. Okay, so when you look at Bank America and JP Morgan in particular, they've been growing primary checking accounts. So there's always a threat from tech and fintech, and they are getting market share in different places. And if the banking industry missed something, it was serving the underbanked and the unbanked, and they threw away too much risk. But look, if given the trade-off after the global financial crisis, you wanted the banking industry to de-risk, and that's what they did. But now they're taking another look at some of those customers that maybe they should have approved when they denied. But aside from these peripheral items, they are peripheral. The primary checking account is the major relationship vehicle that's for the bank. So you're seeing the multi-product, multi-distribution, multi-geographic approach of the largest banks. It's leading to more customers staying around for longer and with greater customer satisfaction. And Wilfred, I was negative on the group for a decade and a half. And now here, we are positive on the bank stocks here. And this is really a time that if you're a portfolio manager underweighted, bank stocks, you better be taking another look.
I wanted to ask you, Mike, about a note you put out yesterday, because I think it was kind of unique, linking banks to climate change ahead of the COP26 UN climate conference next week. And I just wonder, in all your conversations every day from clients, do bank investors really care about where banks are on fighting climate change, and how do they rank? Well,
bank investors certainly care after the global financial crisis, when the banking industry was tone deaf to society's needs. Right now, it's night and day. The banking industry has gotten the memo that you need to take care of shareholders and your other stakeholders. And right now, the largest banks have committed $4 trillion over the next decade for climate issues. Now, that's not going to do enough, and you'll see at the UN meeting starting this Sunday, the world needs a lot more money, but at least banks are doing their part, or trying to do their part, by being trusted transition advisors to all the companies that they lend to. And it's not just climate, it's also diversity, and it's also, being more hypersensitive to the needs of society as well as the needs of shareholders. The challenge and the opportunity is to serve both.
Mike Mayo, thank you for joining us, and congrats on the distinction today. Number 1 from II. We are gearing up for a big hour of earnings. We'll preview the